All right, great. Thanks for everyone for being here. And we're going to go ahead and get started. We're 9 o'clock Pacific time, 12 p.m. Eastern, and just double checking everything on my end. Looks like we're working okay, and you should be able to see my screen according to my view here. And with that said, I know there's always people joining us as we get started. Wow, quite a few more people joined us in the last few seconds here, so that's great. And we're going to talk about a new approach to trading options where we're going to collect option premium. We can use algorithms to do this and automation. We have proprietary technology that generates these pre-built option trades for us, and then it can automatically monitor and track those positions and close those out. And you can use this for hedging or for directional strategies. Anything you would like. There are strategies to apply to any market condition. And a little bit of hyperbole here, but we do have an amazing trade alert technology. You've not seen these trade alerts before, where you simply receive the alert, touch your screen, and accept it or reject it. So with that said, you're in for a treat. We got a lot of slides. A lot of it is just visual, so don't worry about reading everything. And I'll point out what we need to know. And then we're going to have a live demo of the platform. So thanks for Investor Expos and Anna for inviting me to present. And with that said, let's talk about speculating and risk. Keep in mind that every time there is opportunity for profit, there is always risk. So do take a moment and look at the risk disclosure. It is important. Remember that all funds used for trading should be risk capital, and past performance is no guarantee of future results. Okay, how many are familiar with a chart like this? Could be any market over any time frame. And a lot of the strategies and techniques are looking to try to sell when there's a red arrow and the market's going down, and try to buy when presumably there's a green arrow and the markets are going up. So you're trying to trade this in a directional manner. You're trying to sell, buy, sell, buy, sell. You're trying to pick these tops and bottoms, and that's not what we're going to do today. Do something completely different. And we're going to trade stock index options using our proprietary automation. So we're going to look at the indexes and not individual stocks. So we're going to show you why there are some advantages to doing that. So we want to avoid this here. Don't struggle with what trades to make and placing your orders. We want to be like this robot using automation to help us with that heavy lifting. A little bit about who we are. We are Altivest since 1997. We've been doing this for many, many years now. We're an introducing brokerage firm with decades of experience, of course, millions of contracts traded along the way. There's yours truly in the middle, some of our colleagues on the trading floor, the S&P 500 options pit, some of our floor staff, floor traders years ago, not too long ago, but it is different. It doesn't look like that anymore, folks, and we're going to talk about that a little bit. We're registered with the CFTC. We're an NFA member. We're headquartered in California. And what that essentially means is we're in a highly, highly regulated industry and regulated business. And along the way, we've traded millions of these contracts, like I mentioned before. So the idea is don't end up like this poor guy here trying to figure out everything on your own. We think we can help you along the way, use our experience to your advantage. And what you're going to see here is a trading solution built with many, many decades of collective experience from industry veterans. A little bit about myself. I'm Eric Gebhard, been doing this about 30 years now, and I have my Series 3 license since 1991. I have my BS in Business Administration from the University of Southern California. It's the Trojans, if you're not familiar with that. So maybe you've seen some of our presentations in the last few years in various webinars. And if not, hopefully you're in for a bit of a treat here. I'd like to think so, because it is a great technology we've developed, if I can boast a little bit about the technology. But in any case, I got started in mutual funds and annuities. I had my Series 6 and 63 securities licenses, and currently have my Series 3 and Series 65 licenses. All right. With that said, what I'm going to do now, and I'll go ahead and shut off the webcam since we're through with the introductions here. And that way you have a little more space on the screen. So 3 common barriers for trading. Feel free to use the chat box there and jump in and let me know which one of these 3, or maybe all 3, you can relate to the most. I think I've kind of narrowed it down to 3 hurdles that we can all relate to. So how do you actually actively trade in this environment? Are you actually day trading? Do you know that only 1% of day traders are profitable? And that's according to some studies. So let's take a look at that. Here's an article, The Day Trading Pandemic. It says here, Charles Schwab looked at active accounts over a 6-year period, and those active traders substantially underperformed a simple low-cost indexed fund, and the traders who traded the most were the worst. Here's a study out of Taiwan, 15-year period. Less than 1% of the traders consistently beat the market, 80% lost money, and out of Brazil, only 3% made money. So very interesting. And look at this, stock picking. This is professionals. Active fund managers, 79% underperformed in 2021. And over 10 years, 86% of active fund managers underperformed their benchmarks. So can you rely on the professionals to manage your money? Well, maybe, maybe not. But how about social media? Maybe that's where all the answers are. Well, keep in mind, if you want to be popular on social media and get traffic, you're essentially only going to be bullish. You can never criticize. And here's what happens. The day trader army loses all the money it made in the meme stock era. So that says here, amateur investors who jumped in when the lockdown began have now given back all their once prodigious gains, according to an estimate by Morgan Stanley. So here's an example. A guy gets $500,000 from his parents to trade the stock market, and then he's down 96%. So let's avoid that, folks. This is what we're going to try to avoid today. How about listening to popular pundits? Jim Cramer, for example, not trying to pick on anyone in particular, but we probably know his name, and he's quite popular. Here he says, Friday on March 25, the bear market is over. You can see the date here, March 25. Well, how did that work out? This is when he said the bear market was over, right here. And since that point, the NASDAQ is down 28%. That's updated as of Monday. Don't have today's date, but close enough. So I don't think we need to rely on stories and fairy tales and narratives. That's what we're trying to avoid. What about if you are trading, are you actually beating the market? Can you actually do better than the market? It says here that some of these hypothetical back-tested studies, there is something called essentially they call it a monkey portfolio, where they have just a hypothetical back test. And it turns out that 96 of the 100 monkey portfolios were beating the generic cap-weighted index and outperforming the index by 1.7% per year. So there you have it, folks. There's your hedge fund trader right there, the person or the thing or the creature you should hire to manage your money, according to those studies at least. And number 3, this is the third barrier. Emotions. I think this one probably is going to resonate with everybody across the board. Markets are always correct and we aren't. It can be expensive trying to convince the markets that you are right. And if we can all remember that, maybe put it on our monitor, our screen, whatever it is, tie a string around your finger. I think that would go a long way towards helping keep a lot of us traders out of trouble. You don't want to end up like this. And we're going to jump into the demo here in just a few minutes, see if we can avoid that. Stay off of this roller coaster of emotion. You know, you get optimistic, euphoric when you're making money. You get despondent and capitulate when you're losing money, and depressed, and then you're optimistic again, and that cycle keeps repeating. So jump off of that roller coaster. But you know, the emotions we have, we're all human. It just turns out, you know, that really is our enemy. There's a lot of noise to sift through. There's you know, podcast and social media and television and cable and radio and you name it, opinions, and your neighbors and your friends, your family. Everyone has an opinion, but Turns out we can be our own worst financial enemy, according to the Motley Fool. There's confirmation, there's anchoring, and recency bias. And I think you kind of get the idea what all these are really referring to. I won't go into all of them, but I think this one image might summarize it quite well. When things are going well, we tend to think we're a genius, look at ourselves in the mirror and get quite proud. So we want to avoid that. It's going to end up putting you in a lot of trouble. And we're going to talk a little bit about algos and how they're dominating the marketplace. And part of the reason why is because they do not have emotion. Turns out what percentage of trading is machine driven? Probably more than you realize. 90% of US equity trading volume, according to JP Morgan, is dominated by high frequency trading, machine driven, program trading, you name it. Basically, it's not necessarily folks like us behind their monitors or using their apps for most of the volume. And even so, robots here, according to Bloomberg, they're outwitting their humans on their investment picks. So that's what you call revolutionary trading. We're kind of in this stage here. I'd say we're moving into the AI stage, even a little bit beyond this now. Here's what it used to look like, folks, the trading environment. Just a short video I took years back on the trading floor in New York. So it does not look like that anymore. Here's what it looks like. No emotions, automation, built-in controls. This is our competition right now. So how can you use algo-driven option spreads in your portfolio? We're going to look at strategies for bull markets, bear markets, sideways, consolidating markets, all the above, automated options technology for all those conditions. And before we do that, let's look at a quick background for some context on the types of approaches you might use with what we're going to talk about. How do insurance companies make money? How do they handle risk? You know, how can you trade options like maybe an insurance company might? Well, we all know that insurance companies are paid premiums to assume the risk that you don't want. They're selling and managing time, but they're always insuring themselves, called reinsurance, or another way to look at it would be a hedge, the word that traders might use. They're consistent, they're patient. They look at math, simply probabilities and favorable long-term odds, looking at statistics, so forth. And that's what they do. They crunch the numbers and look at the math. So how can we use this and apply this with premium collection strategies on options? How can we collect option premium using a similar approach, looking for these what we call base hits by going short or selling options? We need to be consistent and patient, manage our risk, expecting that we will have losers, but we manage reward as well, not getting too greedy. But to really do this, you need the proper tools. Remember, we're looking for base hits here. And we're looking at some of these premium collection strategies that can be non-directional, bullish, or bearish. And these are targeted outcomes with predetermined risk. That's called a credit spread, where you collect premium. And these are always insured position with predetermined risk and reward. And they may be non-directional. So we're going to look at stock index futures options versus individual stock options. And why do we trade the options we do? Well, first of all, an index is always less volatile than an individual stock. So in many cases, it's easier to manage. And with an index, it's easy to apply strategies for any direction, up, down, or sideways. You can also use an index, easier, I think, to hedge an entire portfolio or even get speculative with your entire portfolio or a part of it. And then, of course, if you're looking at an index for the broader stock market, or maybe two indexes or even three, all you're doing is tracking those 2 or 3 markets or one market rather than thousands of stocks and ETFs. I think there's something like 6,500 securities. So here's an advantage of a credit spread on stock index futures options. And don't worry about this yet. I'll show you in just a second, but there's a wide margin of error on some of these strategies. So here's the upper boundary of the trade. Here's the lower boundary of the trade. And you're looking, in this case, for the market to stay, within this range over a period of time. But first of all, let's look at the Greeks. We're going to look at two. We're not going into the deep weeds here with the Greeks, but it's very simple. Delta is basically how much does the option value change if the underlying futures market changes. And the way we look at it with what we're doing, it's also the approximate probability of expiring in the money. That's a common way that traders view delta. It's just the way the math works. So example, if an option's 0.25, there's a 25% chance it expires in the money, and then a 75% chance it expires worthless. Remember this, delta is always moving up and down with price and time. It's not static. And this is important too. It is not the probability of a winning trade. Okay, and then there's theta. That means time decay. So options are a wasting asset. They have limited lifespan. And we refer to time as theta. It's a negative number equals 1 day of time decay. So if an option's at 10 points, then theta is negative 0.05. The next day after that, the premium slips to 9.95, and then 9.90, and so on and so forth. All things remaining equal, of course, just to illustrate the time decay. This is what it looks like on a graph. You'll see as you get closer and closer to expiration date or time zero, the percent of that premium remaining drops and drops and drops, because of course it will always expire at some point. So here's an example of a call spread, real simple. We don't have to go too deep into this, but here are the calls and puts that you're selling and buying. So in this case, the red line represents the call that you sell, and you collect 4.5 points for selling that option. So you put that money in your pocket, but then you have to take some of that money out and buy the 45.70 call, that blue line. You pay 1.25, but the net result is you put 2.25 points in your pocket, $112.50 in this case, minus your commission, and that's selling a credit spread or a call spread out of the money. And essentially, you're looking for the market, of course, to stay basically below that level. And selling a put spread, same type of thing. The red line, you sell, you collect 3 points. The blue line, you buy, you pay a point for that. The net result, you collect $100 and put it in your pocket. And then you look for the market to essentially stay above that lower boundary there. So these are not naked options. These are all insured or hedged positions. Your maximum risk is always capped in advance. That's what you call a covered option spread. No naked options trading allowed, like these poor naked creatures here. And here's a big advantage, folks. No margin calls and no unlimited risk. So we are not trading naked options. If you're doing it, or if someone tells you to do it, I would highly recommend against it, because it may work for a while, and it may work very, very well for a while until you give everything back in a very short period of time. But the advantage with the covered spread is there's no margin calls, meaning you don't end up in a position where the market is trading you, and you don't end up putting good money after bad to hold on positions and hold on to losers. It's a really, really bad place to be. So here's an Iron Condor. It's just a combination of the put and call spread that we saw. Here's what it looks like. You have an upper boundary of the call spread and the lower boundary with the put spread, and you're looking for the market to stay in this wide range here. And then here's our proprietary strategy. People call it a little weird, but we kind of like that. And it's another variation called a Dragonfly, and it's 6 legs, and you're collecting option premium, and it's really the variation on a condor. And you're gonna probably look at this and scratch your head at first, but I'll explain it. Very simple. So let's look at our calls. You sell 4, you buy 3 further out of the money, and then 1 closer to the money. And the same with the puts. You sell 4, you buy 3 further out of the money, and then 1 closer to the money. And I'll point out here that the put and the call that you buy, this quantity of one here and this quantity of one there, in this case is 50 points closer to the money on the puts and the calls. And remember, you buy it, meaning you own it. So if the market's running higher, closer to the short calls, you own this one here that's 50 points closer to the money. And it's going to completely change the dynamic of this trade and the character and the risk reward of this trade. And I'll show you that in just a minute here in the demo. And we have unique strategies for bear markets or even bull markets. Here's something called, well, essentially the half Dragonfly, just doing the call side only. So you can just sell and trade the calls on a Dragonfly. So it's a non-directional strategy. It may become profitable as the stock index goes sideways, or it decreases, or it moves even modestly higher. So this is what this might look like. Just the call side of a Dragonfly. That's basically called half of the Dragonfly. Or there's something called a bear hedge that we came up with, and it may gain value as the index decreases. And here's what that looks like. You sell an out of the money call spread, and with the money you collect, you buy an out of the money put spread. And typically you can do this for even money or even for a small credit. So the trade doesn't cost anything. And if the market starts to really drop, then the trade becomes profitable. So we're going to show you how to manage that and how to place these trades. And that's part of what we're going to do in the demo. But I know you're all scratching your head thinking, how do you even create a spread? How do you know which market to do or buy or sell? What strategy to apply? What's the timing, the price? How do you enter? How do you exit? How do you manage risk, profits, so on and so forth? So those are great questions, and here's the answer, folks. It is Theta Trader. These are pre-built option spreads, and our proprietary algorithm creates what we call theta trades on a daily basis with advanced strategy automation to help you manage those positions, bull, bear, flat market conditions. And I mentioned managing the position, something called the RTI. And I'll show you that in a second. It's color coded. So simple, effective option spreads and profit and risk management. So let me switch screens here. So give me just one moment. Okay, you're now staring at and looking at the dashboard for Theta Trader. And let me drill down and kind of walk you through this. It's quite simple, and that's by design, of course. This is just a demo account, so a real account wouldn't have all these menu items, but otherwise it would look essentially the same. This is the dashboard for Theta Trader, so if you have an account, you would log in and this is what you would see. You would see in this section here the Theta trades, and you'll notice there are bullish and bearish and non-directional strategies all pre-populated. You'll notice the markets that we're trading, the E-mini S&P 500, E-mini NASDAQ 100, and E-mini Russell 2000. And I'll explain why we're trading those markets in particular in just a second. And you'll see your open short positions here. So any short spreads or premium collection spreads that you have open, you'll find right here at a glance on the dashboard, and any long or bought positions as well right here. On the right side, you'll see your account info. Now this is pulled, connected, and integrated directly with your AltaVest trading account. And of course, Theta Trader is our trading platform, meaning AltaVest. So this is our technology. It works with AltaVest, and current quotes here. So let's take a quick look at these strategies that are pre-populated. You can see they're already built out for you, bearish or non-directional, depending on your outlook. So we've looked at some of these non-directional strategies, and we'll just jump into a condor. You can see the algorithm has chosen these trades anywhere from 16 to 60 days till expiration, and the strike prices are all pre-selected. The expirations are all pre-selected. The numbers, of course, the calculation for the profit potential here, that's what that means. At expiration is all pre-calculated here. And this is your targeted annualized return at expiration. I'll explain that in a second. And let's jump into drill down and look at one of these a little more carefully. And by the way, I'll explain all the colors in just a second as well. Let me see here. Can you see the screen? Maybe that'll help. I know when I watch presentations that I don't like it when I have to look too carefully at little tiny spot on someone's screen. So hopefully this helps. So the first thing I like is looking at a graph. So you can see this is the call side and the put side of the condor. Here's the current market price. So really essentially once you place this trade, you're looking for the market to sort of stay within this range. That's the idea for this trade. And we won't go through every detail here, but you can see the market, the days till expiration, expiration date, the premium collected here, put risk, call risk, commission, available capital in the account, cash required, profit potential. And I'll look at this here real quick. Targeted return on cash, just over 10%. And this is your targeted annualized return. And let me explain that real quickly. You can see some big numbers here. And no, you cannot expect to make 264% per year if you place this trade. This here is just representing comparing this one trade to all the other trades. So it's really comparing one trade to another. Then you'll notice the ones with the fewest days till expiration will have the larger targeted annualized return. This just sort of assumes, giving you an idea that if you were to place the same trade every day, I'm sorry, every 16 days for a year and it were profitable each time, that would be the result. But really it's just to compare, one trade to another. All right, and here's a good question I always get. It takes $900 to try to make a maximum of $91. So why would you do that? It seems sort of an asymmetric return uh, in a manner that is not favorable. Well, keep in mind the put that you're selling here, according to the algo, has a delta of 9.78. So that means there's also over a 90% probability that this option would expire out of the money. And then the call you're selling has a 6.74 delta, so over 93% probability that this call option is going to expire out of the money as well. So these are the higher probability outcomes in the math. That's what it suggests, and that's why the algo has chosen those. You'll see here, it presets to a sell. You're selling the condor. You can do 2 of them, 3 of them, and you'll see the numbers change as you change the quantity. So we'll go ahead and do 5 of these. Cash required of just under $5,000. It's typically about $1,000 per condor. We'll leave the value here at 2.25. That's how much you're collecting. And then we'll go ahead and place that order. And there it shows up in the demo that you're filled at that price. So that's just how simple it works. And let me show you a Dragonfly, and then I want to run you through some trade simulations where you go backwards in time and you can back test. Just one moment, folks. Okay, so we'll take a look at a Dragonfly, and we'll use this one here, August end of month expiration. All right, here's an overhead view. These are the calls, these are the puts, and here's the current market price. So again, you're looking for the market to then just sort of stay within that range. And you'll notice the calls are 42.80, the puts are 3,000. So you're almost 1,300 puts, 1,300 points on the S&P, a difference between the puts and the calls that you're selling. It's a very, very wide margin there. And this graph here, this table will look similar, except of course now you're doing a Dragonfly. So the settlement value here at 9.5 points, the premium collected, the put risk, call risk, commission, capital, cash required, targeted return, targeted annualized return. You'll notice the targeted return on cash and the targeted annualized return compared to a condor will be smaller. And that's simply because, again, like we pointed out a few minutes ago, you are paying money to buy this particular call and this particular put. That's additional insurance, and so to speak, that you're paying money for. So that limits a bit of the profit potential, but it does create a very different dynamic on the trade. It can be much more robust, and I'll show you that in a second. But you can see here the puts here, delta of 9.95, so over a 90% probability that this put would expire out of the money, and then the 4280 calls, 6.82%. So again, you're talking over 93% probability that this call option will expire out of the money. And we're going to go ahead and sell. It always defaults to a sell on the Condor, of course. And you could do 2 and the cash required goes up, or you could do 1 of them, you could do 3 of them. We'll jump in here and we'll do 2 of them. We'll leave the pricing alone. You're trying to collect 9.5 points and you place the order. Just that simple. And with that said, I want to point out that we have a great tool here where you can go backwards in time and you can back test the performance of any of these strategies. I need to shrink this down to fit more on the screen now. So you go right here to Trade Simulator. I've loaded some to save some time. So here is a Condor for the end of month August expiration. So this is what the algorithm had chosen on that day, and you can use these buttons down here to go forward in time, 1 day at a time. You can see here as the trade gets placed, it's still negative because theta decay hasn't worked yet. The RTI says green, and I'll show you more about that in a second. So you can go step by step, you can go backwards, or you can use the play button. And you can see the trade's turning profitable now because theta decay is starting to work. And it turns blue. And what does that mean? It means profits. The algorithm has decided that it's time to get out of the trade, take your profit and run. And the trade is now matured enough and you can get out and take your profit and go to another trade. But here's the real key, and I'll show you in just a second. You can automate this so that you don't have to watch your screen, you don't have to babysit anything, you don't have to do anything. The algorithm is scanning and monitoring your account for you, and whenever it gives a blue profit-taking signal, it will automatically place the order for you. And I'll show you how to do that in just a second. But first, let me run through a Dragonfly example. So remember, this was the Condor, the end of month August, and it had a profit-taking signal here with 12 days remaining. Now imagine if you had done a Dragonfly on that same day for the same trade, the August end of month expiration. Look at that, it turns blue with 28 days remaining. So on August 4, you have a signal to get out, close out the trade and take your money. But on the Condor, you had to wait till August 20. So you can see there's a big difference sometimes between how a Condor and a Dragonfly behave. And oftentimes the Dragonfly will mature more quickly than a Dragonfly. I'm sorry, the Dragonfly will mature more quickly than the Condor. So it allows you to get out of that trade, take your money, and go on to a different trade. So some big advantages with the Dragonfly. And here's a bear hedge. We talked about that briefly. Again, you've sold an out of the money call spread here, collect premium, and with that money, you can buy an out of the money put spread. And kind of a fun little strategy to have, but you can see here the market's obviously moving favorably here and the trade's green, turning profitable. And if you wanted to hang on it all the way till expiration in this case, I guess you could. And it turns out really at a maximum profit potential. But also keep in mind that when we're doing these condors and these dragonflies and other strategies as well, the Theta Trader algorithm will always give you an exit signal before the trade expires. So whether it's a profitable signal or taking a loss, one way or another, you're going to be out before expiration. And I should also point out in all of these theta trades and everything and all the percentages and all the profit and loss numbers and everything is all net of all trading cost, all commission. And here's a half Dragonfly call. So this was just earlier this year, January, for the end of month March expiration. So again, instead of doing the full Dragonfly, you're just doing the call side. And that's kind of, this is all that chop. This is all that chop, and a Dragonfly is going to love a choppy environment. So you can see that trade worked out well. Here is a December end of month Condor. Let's run through this one. Oh, let me go back in time real quick. Okay, so you'll notice right away some different colors happening. Yellow means slightly elevated risk, and you can see the trade is losing a bit of money here, but still the algorithm says not to do anything. Then it goes orange. That means even a little more risk, so the threat level is a little higher. So yellow and orange. In fact, let me do this. See, yeah, there we go. Now we can see everything on the screen. So this one here is really flirting with a loss, but the algorithm says stay with it. And then it turns red. So too much risk, get out of the trade, take your loss, take your lump, and move on. And again, if it turns red or blue, meaning if it's a profit or a loss, this can be automated. So Theta Trader will automatically submit that order for you to close out that position. So this is the December end of month Condor. And let's compare that to the December end of month Dragonfly. Let's find out if there's a difference in performance. Again, you have the yellow, the orange, elevated risk. And look at that, it turns red, and it too took a loss. And I wanted to point that out, meaning just because you have a Dragonfly in place doesn't mean it's impervious to losses. Okay, so I just want to point out that we're not trying to sugarcoat anything and tell you that a Dragonfly is going to keep you from ever taking a loss. So just wanted to point that out. Then here's another example. Here's a Condor, March expiration. Let's find out what happens here. So everything's green, so far so good. Even though it's red, the P&L is a little red, the algorithm says do nothing. Essentially, wait for theta decay to work is what it's trying to tell you. Turns yellow, it's getting a little bit closer to that upper boundary. Oh, and then it turns profitable now. Then it turns orange, high risk, then back to yellow, back to orange. So it's kind of chopping around here pretty, and then it turns red. Too much risk, get out, take your loss. Now, instead of a Condor, what if you'd done a Dragonfly on that same day? Let's find out if there's any difference in performance here. Look at that. It actually gave a profit-taking signal. So instead of having a losing trade with the Condor, this one here gave you a profit-taking signal, and then the order would have been placed for you automatically. And while we're on that note, let me show you how to do that. You just simply go to My Account, and you'll see your settings here. If you want to automate your risk manager, you check that box. If you want to automate the profit directive, you check that box. And then down here, you save your settings. And that's all you need to do. And Theta Trader will automatically monitor and place those trades for you whenever they hit that profit or risk directive. Then let me point out also that there are video tutorials all embedded in Theta Trader. There's educational videos as well. If you need a refresher on some of the strategies and options trading, there's a great help file. I won't go into all of it, but this is actually very question we get all the time. They want an explanation on the color coding, so it's all right here in the help file. Here's some more explanation on the various strategies and definitions, all in the help file, but quite frankly, you see how user-friendly it is. You probably won't need a whole lot of that. Here is our daily proprietary research. This is more of a visual approach here with the charts, and there's a bit of a narrative on the market outlook, looking forward, and what trades we might be looking at in the near future. There's also a daily trading summary. That's a narrative on what happened in Asia, what happened in Europe, and looking ahead, and any technical support zones, any economic calendar to be aware of here. People love reading that because it's everything at a glance. And then if you want to go back, let me point out real quickly here, the best feature of all, but I also want to point out something really quickly before I jump to what I think is the best feature of all. Remember, we looked at some non-directional strategies here with the dragons and the condors. We looked at these bear hedges, for example, but there are, if you just want to buy some put spreads, you can. Maybe just buy some outright puts, you can. If you're bullish, maybe you're expecting a bounce, that's fine too. There are bullish strategies. Those are all pre-populated. You could do some half dragonfly puts, sell some out of the money puts. You could just simply buy some calls, but the algorithm has basically chosen all of this for you, is really what I want to point out. So if you want to buy a call spread, maybe something shorter dated, you certainly could. Here's a June end of month. The algorithm has selected, but I'd say most of the trades that we're looking at, and I'll show you how we do this for a lot of them, is the non-directional strategies in particular are going to have probably 60 days, give or take 10 days, depending on the volatility in the marketplace at the time. But you can see here's a call spread, for example. This is what the market's been doing, and then you look to buy this call spread and maybe catch a bounce, for example. That's more of a directional play, shorter dated, kind of a lower probability outcome. We like to look at the higher probability outcomes with these short option strategies where you collect the premium and where you have those deltas, really probably sometimes at 6, 7, 8, 9%, something like that. So it means you have over a 90% plus probability that the options you're selling will expire out of the money. For example, here, 9.68, 6.91. So again, over 90% or 93% probability these options would expire out of the money. All right, very good. So let me show you the best feature of all. All right, folks, takes a minute to switch screens. So here we go. Let's make it even, let's say, simpler, more user-friendly, shall we say. These are the trade alerts I mentioned earlier, and these are quite literally 1 minute or even 10-second trade alerts, and it's really that simple, one-touch responsive. So you simply touch accept or reject, and that's all you have to do. These alerts are all part of the Theta Trader platform and software, and these are live, meaning they're integrated with your AltaVest trading account. So you receive the alert, you want to accept it, you just touch accept, and everything flows through our technology, and the orders are placed for you. And then if it's filled, Theta Trader will track it and monitor it, and then close it out when it turns red or blue automatically. It's that easy. And here's just a simple video. You'll receive a text message or email, and there's a link. You just touch that link. It takes you right to the alert, and you'll get a graph of the alert. And you'll see here the net premium being collected, the cash required. The quantity is already selected for your account. So everything is already there, and the alerts that you receive will be unique to you and your account. So you will not get an alert that has the same strike prices as an existing trade, for example. And let's see how simple this looks here when you just touch accept, and then that's all you have to do. And that, we'll just watch it one more time. Should probably do another little video where you can zoom in a little. I can zoom in a little bit better on the screen, but I think you get the idea. And that's all there is to it. So it could be a dragon, it could be a condor, it could be a half dragon, it could be a long option strategy too, because we will do that on occasion. And that's simple. So with that said, for those of you, and hopefully this is resonating with a lot of you that know how unique and useful something like this can be if you're trading options, here is the offer, the special offer, the Investor Expo special offer on how to get started, how to get involved, how to become a Theta Trader user. We call it a Theta Trader membership. You'll get all the benefits we just reviewed. You'll have the software accessible to you with all the Theta trades, the risk thermal indicator, that's the automated risk and profit tracking, and the trade simulator. I've never seen a six-legged option spread back tested, so you have that ability to go backwards in time and really see how these strategies would work out in various environments. Software valued at over $3,500. And then the one-touch trade alerts. Remember, these are integrated with your account. You simply touch accept or reject. The trades are unique to you and your account. Everything is live and integrated. You simply touch accept or reject. And then once the order is filled, the RTI will manage it if it turns blue or red. That's simple. That trade alert value over $4,400. So you have the Theta Trader membership, including the software that you saw, the app, and the platform demo we just did. That includes all the trade alert functionality. That's valued over $8,000 for that technology. But this is important because we're not just a technology or a fintech kind of setup here. We have a lot of experience, and you're going to be able to talk to us. You have a private coach. We can share screens with you, guide you through, be your co-pilot, develop that relationship with you, someone who's, we're licensed, of course, experienced. We can review your trades, maybe talk to you if you have some questions about something, or maybe your outlook in the future, whatever it may be. I mean, the value there, $7,500, is way undervalued. People are spending $25,000 on online education. I hear about it, I see it, I talk to people doing this, and that's fine. But what we're saying is, we're going to provide you what you need to use Theta Trader. And we have experience, and we're licensed and credentialed. And not a lot of people are, folks. Not a lot of people are. Now, Theta Trader software and the trade alerts with the private coaching, a value of over $15,500. And yes, let's not forget what we talked about with our proprietary research. It's a very valuable approach to trading. It's a very concise approach. You don't have to go on and on and on and read about ridiculous arguments and opinions from people. We just cut right to the chase. So you have that proprietary research available, almost $3,000 value. Then of course I mentioned those online tutorials. Those are all just part of Theta Trader, but it is a useful resource where you can jump in and look at those tutorials on options trading and also Theta Trader as well. So your Theta Trader membership, just to summarize, it includes the Theta Trader software, the alerts, your private coaching, and the research valued over $18,500. And here is the price, $29.97 for your Theta Trader membership, but it is not the price. It is, however, in fact, we would charge, people were paying almost $4,000 in our live in-person events. We would do these presentations, and at the back of the room. We'd have tables set up, and then people would come and sign up, become a Theta Trader member, and they were paying $4,000. But we can do a lot better than that for this special online presentation thanks to Investor Expos. $797 Theta Trader membership, and we'll do even better. This is lifetime, folks. 80% off retail, and we'll have this offer good through Friday, and it does expire. $597, and that's one-time payment. That's a one-time payment of $597 to become a Theta Trader member, and that's a lifetime membership. And we've been doing this since 1997 with AltaVest. And here is the link to make it happen: cf.altavest.com/TT. And I'll pause right here if you want to take a screenshot of this page, or maybe take a picture of the page, because that's my direct phone number. So yes, we talk to people, and that's what we want you to do. We want you to talk to us. If you had any comments, thoughts, questions, let me hear your story. You know, I'm with XYZ brokerage, I'm doing this, I took XYZ training, I'm having trouble doing that. I've taken these 3 or 4 courses, I don't know what to do. I'm currently trading, but I think I can do better. I really like, whatever it is. Let us know your thoughts. And of course, if you call me now, this very second, I'm live on the phone, but it'll either go to voicemail or get forwarded to someone. Or you can call me another time later today, or use my email, Eric, ERIK, @altavest.com. Now, no excuse, folks, even if you're kind of a little bit on the fence, 30-day money-back guarantee on that membership fee. So if you sign up now, you pay, become a member, and you love it, and then something happens in your life and you just don't have time for it, Eric, I can't do this right now. That's fine. I will just credit that right back to your card, and it's just that simple. We're not twisting anyone's arm, folks. We've been doing this for many, many years. So you really have no risk and nothing to lose. 30-day money-back guarantee. How about a few FAQs? In fact, I see some comments and so forth coming in. Let me make sure I don't miss anything. Okay, good. So far, so good. So tax efficiency, if you didn't know it already, futures options are tax efficient. So your combined tax rate can be reduced by about 10% on your investing and trading, just because you're trading futures options. For example, in this, the math here, if you're trading individual stocks, you get a 20% return on $100,000. You pay $7,400 in tax, and that's a rate of return of 12.6%. But if you're doing futures options like we do, it gets favorable tax treatment. You only pay $5,360 in tax. You save over $2,000 in tax in this illustration here, simply because we're in a tax efficient environment. The IRS treats the gains differently in our industry. Basically, 60% of the gains are taxed at the long-term capital gains rate, which is almost always less than your individual income tax rate. And there's also no more itemizing. So keep that in mind too. No more wash sales or itemizing your trades, but always consult your tax attorney or advisor for details on the tax ramifications. And IRA, yes, you can do an IRA. Contact us for details. There might be some financial or experience requirements, but a lot of people love using their self-directed IRA. Forbes has some good pieces here with alternative assets using a self-directed IRA. So that's exactly what we do. And why the E-minis? Well, they're liquid, they're efficient, and they're cost effective. That's why we trade the E-minis, and I'll show you why in just a second with more detail. But the E-mini S&P 500, just that one market, it outtrades all ETFs around the world by over 2.5 times. So the mini is huge. It's 2.5 times larger than all ETFs. And what do I mean by that? The average daily dollar volume on the E-mini is almost 10 times greater than compared to the SPY. And you see the ETFs here over 2.5 times greater. So this is the market you want to be in, folks. 5 more advantages for the E-minis. volume, liquidity, access. Superior execution is really what that means. So you get cost savings of $4 to $15 per contract on the ES options compared to SPX. So that means you get the tight bid offer spread. How about the largest market share on those ES options? Densely packed strikes, 100 annual expirations. You get granularity and coverage. And what that means is, here's some calls and here are some puts, and the algorithm in Theta Trader is looking for strike prices to build out the trades it needs. And the algorithm is going to find what it needs in the E-mini space for the large. I mean, I've never really seen otherwise where the algorithm can't find what it needs. So, and then as time goes by, here's another set of calls and puts, and as more time goes by, another set of puts and calls. So you want to keep your strike prices laddered from existing trades, and that's what the liquid market like the E-mini allows you to do. And also, here's a big advantage. The E-mini spreads that we looked at, like the Dragonfly, it trades as what they call one object with the E-mini options. So Theta Trader places that as one order, as one object at one net price. So 6 different legs, all done at one order, one object at one price. You can't do a Dragonfly in the stock market. Try it. I've seen people try it. You can't do it with one order. You have to break it up into 2 separate orders and then monitor 2 separate spreads, and it's just a nightmare. Huge advantage, huge benefit, huge efficiencies in the E-minis that don't exist in those other spaces. So, and again, you're just doing 1 or 2 or 3 different indexes, not thousands of markets. So certainly that's much easier to trace and track. Efficient margin compared to stocks, and then there's a clear cost structure, meaning it's not opaque. The cost is not buried in some spread. And that's really a hidden cost, and I'll show you that in just a second. But remember, we're trading at the CME group on the Globex exchange. It's the electronic exchange for all orders. Every order is placed through Globex and treated equally. Every order, whether it's 1 or 500. So equal treatment. These are not securities options, so there's no payment for order flow, none of this Robinhood nonsense, none of this fake, quote, free trading. Of course, everyone needs a brokerage firm to trade stocks if you're going to do that, but it's not free. Let's not be fooled. Robinhood gets fined $65 million. This guy says here, you're saving a penny to lose a nickel. So if you think you're trading for free with stocks, you're not. In fact, it's worse. It's just disguised commissions. If you want a broker to work for you, pay a commission. And nothing of value is truly ever free. I think that's kind of a fair assessment there. And then look at this, SEC chief, they're going after that whole free trading stuff anyway. So they're going to transform that whole business and require firms to compete and execute trades differently and compete for orders, and boost competition, and so on and so forth. So that party's over anyway, but how ridiculous was that? It's not free. You get terrible fills and they call it free. So what are the commission rates on Theta Trader? Our rates are competitive at 5.25 all in. That's inclusive of everything, all in. And other places might publish rates that look lower, but they're not. Here's a screenshot here, and it says, oh, we charge 2.25 for an option on futures, but that's per side. And then they add more fees on top, like clearing and exchange fees that you have to read the fine print. It ends up being more. So our rates are very competitive. And people ask, well, what is the performance of Theta Trader? Well, keep in mind, it's just a platform for traders such as yourself, self-directed traders making their own decisions. Everyone has different performance. And keep in mind too, I mentioned that all the results are net of trading cost. What size of account? Well, each Dragonfly is about $5,000. So if you want several Dragonflies in the account at once and different Condors and different spreads and whatnot, we suggest a minimum of $25,000. And then if you want a free membership, people love to take us up on this offer where we can just rebate that whole membership fee right back to you. If you have $100,000 or more, we'll just rebate that amount to you. If you do $50,000 to $100,000, we'll rebate 50% of that account membership fee to you. So keep that in mind. People love taking us up on that offer. Again, we're a brokerage firm. We can do any type of account that any other brokerage firm does. You could do the individual, joint, corporate, trust, LLC, you could do IRA, you name it. And then here to kind of get closer to the end here, and I want to make sure I get all your questions if you have questions and comments. But why would you even consider Theta Trader? Well, keep in mind it's a non-correlated alternative approach, and I'll show you more about that. But it says alternatives whose performance has a low correlation to traditional investments. It may improve diversification and lower your overall portfolio risk. So let's keep that in mind. But here's kind of the obvious. Central bank fueled asset price appreciation. So what am I talking about? Well, I think you know, but I'll show you this graph and then you'll think, wow, I didn't know it was that bad. But is all this coming to an end? Look at this. S&P 500 is the red line. And the blue line here are the assets of all the central banks, major central banks. So do you see any correlation there, folks? It looks to be like, 90+% correlation. Basically, as long as the central banks are, let's just say, loose with their monetary policy and quotes printing money, that's been driving asset prices such as stocks higher. And here's just a more zoomed in view looking at the Federal Reserve balance sheet. So amazing, that correlation. But as you know, that's also creating inflation. And we're all feeling it. U.S. consumer prices are highest since 1981. Consumer stress, utility costs, gasoline, food, home, electricity, inflation surged by 25% year over year. Look at that, just crazy. Gas prices, I'm not gonna, rub it in, folks, but we're all getting hammered at the gas pump. Record highs. Inflating prices all around. This is the Crb Commodity Index, so commodity prices in general. Energy is a component of this as well, but food and so forth, agriculture. Big inflation here. Sentiment, how about this? Consumer sentiment, record low in June, down here. Consumer credit, all-time high. How about this? Total credit card spending is surging. Everyone's maxing out their credit card. Record highs here. Total consumer credit. Mortgage rates up to 6.28%. That's just from a week ago, I believe. And so what is that doing to the housing market? Well, I'll show you in just a second, but look at the pricing here on the mean price of a new home and the median. But home sales now starting to really fall. And look at this. This was interesting. In 2019, a $300,000 house had a monthly payment of about $1,200. And now you're at almost $2,000 for that same house. So that's a big difference. You can see the payment here, payment values spiking higher. And this was interesting here. Now, just 2 years ago, here's the payment. A typical payment could afford a $250,000 house. Now a typical payment could only afford about a $180,000 house. The Atlanta Fed slashes their Q2 GDP forecast to 0. So GDP is expected to be 0%. You can see down here. So really you've got credit card debt at highs, inflation at 40-year high, monthly rents all-time high, gas prices all-time high, stocks having their worst year since 1940. This guy says here recession's coming. Well, that's what the indicators and the data suggest. Here's the article. The Fed always screws things up and the US will be in a bear market by summer. So that was in April. And I just left that in there because it looks like this is coming to be true here. He says they're going to keep tightening as the markets are going down. So the Federal Reserve is going to keep tightening and raising rates. And sure enough, 75 points, the most in like 40 years. So here's your number of expected rate hikes now. Don't need to really drill down into that, but this is kind of a joke at Powell's expense, but that's okay. Inflation, QE won't cause inflation. Well, some's in transitory, it's peaking and da-da-da-da-da. Well, a recession, but you will not lose your home. Okay, maybe you lose your home, but you won't starve to death. Of course, it's all tongue in cheek, but should we really believe what these people are saying? He says there's no sign of a slowdown in the economy. That was last week. I don't know, that's hard to believe, folks. But keep in mind, these people are academics. They've never had jobs in the private sector. And now they're starting to admit they were wrong, and the inflation deniers are finally admitting it. Janet Yellen admitted this month what we already knew: inflation is not transitory. Jamie Dimon, JPM, Goldman Sachs, talking about concerns of an economic disaster. The IMF, the Bureau of International Settlements, World Bank, UN, global food shortages coming. So, here's what they've done to the purchasing power of the dollar in the last 20 some years. Here's what's happened. We don't need to go into it, but as they go off the gold standard, here's what happens to the I guess you could say the top 1% of the earners compared to everyone else. So CEO confidence is now negative, coinciding with the profits recession or negative year-over-year changes in earnings. U.S. recession odds are now rising, getting close to 80%, according to Bloomberg. And here, this is kind of what I want to end on this, because the reason is, well, why should I even do something unique and different like Theta Trader? Why can't I just passively sit in a broad-based index fund like the S&P and the Dow or the NASDAQ or Russell and just sit there and do nothing? Well, everything mean reverts at some point. Here's essentially where we are on the S&P 500 in relation to historical indexes, in relation to the exponential growth trend. So over time, at least historically speaking, all of these outlying results here mean revert at some point. So there's got a lot of way to go. Like I mentioned, why not just sit in a passive fund, or why not have a 60-40 portfolio? Well, the classic 60-40 is getting clobbered this year because, as you see, yields moving higher, bond prices dropping, along with stocks. Next 10 years don't look good according to this particular statistic. It's called the R squared, predicting 70% of the changes in the stock market's 10-year return. And it says now that indicator is projecting the S&P will produce a total real return of minus 4.2% over the next decade. So that's certainly possible. So we like what we're doing. It's an allocation to alternative investments, an alternative approach. It's unique. You don't have to have the stock market moving up every day, year after year. You can have unique strategies looking for markets to move up, down, and sideways. That's called absolute return, or a non-correlated instrument. So you don't need that index to go a certain direction. And here are the benefits of sidestepping these bear markets. Let me show you this one here. You can see these bear market periods here in 2000 to 2004, and then 2008 to 2012 or something. But let me show you this here real quick. It took 6 years after the tech crash and then 5 years after the financial crisis to regain to prior highs. And that's just math, folks. If you're down 50% in your account, of course, you need 100% return to get back to break even, so on and so forth. I mean, if you've been in crypto, sorry to hear it. I mean, you probably had to hang on to some losses, and here's 70% lower on Bitcoin. So you have to get back 233% to get back to even. So you want to try to avoid that. And keep in mind, stocks, there are decades of time where, here's the Dow, that markets just kind of goes sideways in a big choppy sideways pattern. So you can't always rely on just being passive and expecting, to pull a lot of money out of the stock market. So here's a portfolio 1, here's 2, here's 3. You have a slice of that alternative pie there. We like the alternatives and the approach that Theta Trader takes. So all market conditions, strategies, pre-selected spreads. You have the automated trade exits with the RTI. Then you have those integrated, those one-touch trade alerts. I can't tell you how many people love those trade alerts and rely on them and lean on them. And then us, you've got people to talk to, actual people. So 5 steps to get started, very, very simple. You just go to that page here, complete that order form for that member. Then you'll get your Theta Trader credentials. You get an email with your account opening instructions. You can do that all electronically. And once your account is open, we'll send you instructions on how to fund it with a bank wire or an ACH transfer. And that is it. So we'll leave this up for a moment. And we'd love to have your comments, your questions, your feedback. You can reach out to me anytime. But if you think this is something that might be for you, feel free to sign up. And remember, we do offer that 30-day guarantee. All right. Let me see if there's any comments or questions that I haven't really gone through yet. Yep, there are some questions. So, okay, someone mentions entry, exit, stop loss. Yeah, essentially the red RTI is your stop loss. That's right. And then the blue is your profit taking order. And that can all be automated. And let's see. Yep, hopefully we showed you enough of the stuff here. And someone said, show us your stuff. And we're trading on the E-mini stock indexes. So that's the markets we're trading with Theta Trader and using these option strategies with. And let's see here. Someone liked the baboon. I like that. Thanks for that. And let's see here. Someone says the risk reward on the example, $1,000 risk for 300 reward. Well, remember these are looking at the deltas. You have a higher probability outcome based on the math of the delta. So we kind of reviewed that. That's why anybody would ever. That's why people sell premium. That's why insurance companies collect premium. So over a period of time, they look to collect a lot more in premiums than they end up paying out. So yes, that's something we reviewed. Yeah, the automation, absolutely, the RTI. So once you set your RTI to automate itself, it will place those orders for you, absolutely. And no, there's no other monthly fees. It's just the one-time, one low payment, $597, and that's the membership fee. And then of course, you saw in Theta Trader, there are of course commissions for the trades, but no, there's no monthly fees or anything like that. And yes, you receive your tax statements when you have an account with us. We will definitely provide those to you, just like we do every year. And again, Theta Trader is our online platform for trading these option spreads. And when I say our, I mean Altivest. We are a brokerage firm. So just like other brokerage firms have their own trading platforms, we have Theta Trader. So you open an account with Altivest and use Theta Trader. But thanks for the questions there. And let's see here. Yep, someone says doing nothing can sometimes be an action. Absolutely. Choosing not to decide is still a decision, as they say. And depending where you're located in the EU, for the most part, unfortunately, we can't accept clients out of the EU. We'd love to. Same with Canada, but call us or send an email to me, Eric, E-R-I-K, at Altivest, or even info at Altivest. That's fine too. That goes to staff. And let us know your situation. It just depends, but that's a great question. Yes, and you can also use the Theta Trader platform to build your own spread or modify any spread. That's fine too. And someone here is asking about a recording. Yeah, there is a recording available. And let me do this real quick to kind of answer that one spread question about doing it on your own. Let me switch screens. Okay, I don't typically go into this part. No, where is it here? Trade Builder. So just so you can see that if you want to start out from scratch and build your own trade, you certainly can. You can just pick the expiration you want and the market you want here, and then just go through and pick whatever strategy you want. Maybe you just want to do a call spread, and then you click next, and you just go through following the steps here to buy it or sell it, your quantity, put the price that you want, and so on. So yeah, you can do that. However, it sort of defeats the whole purpose of Theta Trader, which is meant to make it so easy for you that you don't have to do that. I'll also point out one thing here as well. So Theta Trader, of course, will generate those Theta trades for you, build out the trade for you. So for example, here's a trade with 16 days till expiration. Just pulling this up for illustration here. And I don't know if I pointed this out or not, but you can change the strike prices if you'd like. So you can take an existing Theta trade and modify it. And of course, it'll change all of the parameters of the trade, but you're allowed to do that as long as you have the margin to make that happen. So yeah, absolutely, you can do that. And let's see here. People are asking, yeah, there is a recording, and yes, sign up, you become a member, and then you can certainly use Theta Trader in demo mode. No one's going to force you to trade with real money right away or anything at all. So absolutely, you can use that in demo. You'll receive the trade alerts in demo mode as well. All right, let's see if there's any other questions I'm missing. Okay, I think I've got all the questions in front of me here and I've addressed them. So if there's any other thoughts or comments, let me switch over real quickly here. And I would say this too, keep in mind we're in a regulated business. We've been doing this I've been doing it over 30 years. So, there's a lot of hype in the internet and social media, and you're not going to find that from us because a lot of that is not legitimate. And, you're working with people who are experienced and they're licensed, and we're in a regulated environment. So that is to your advantage, folks. We're not, you're not going to get emails from us that say, we're crushing it with 500% returns in a day. So that's not how it works in real life. This is a slow and steady approach, something alternative and something unique, wherein you don't have to babysit the screen and screen watch, and you can live your life and really not spend sleepless nights getting up in the middle of the night trying to monitor your positions. This can all be done for you, and that's why we built it out this way based on client feedback after having thousands of clients trading options with us. This is what we came up with as our proprietary approach, and people absolutely love using it. They love the trade alerts, they love the simplicity, they love the unique approach to the strategies. So I think there's really something for everyone in there. So there is the page here to get yourself signed up, become a member. Remember, it's a one-time payment. It's only $5.97. It's heavily discounted. It does expire, so you're welcome to sign up right on that link, and we will then get you started on your journey into Theta Trader. So that will do it. We'll wrap it up, and thanks for your time. I appreciate it. I know it's a lot of action here today in the stock market and financial market, but that's okay too. This is important to learn something new and get educated. I like these presentations and talking to people and answering questions, and of course there's always lots of phone calls and so forth afterwards. So we love that and look forward to hearing from you. We'll wrap it up. Thank you. Bye-bye.